Hi everyone, this is Rob Roy, and welcome to the Elliott Wave Options TradeFinder Live. Hopefully everybody's had a good week. Each week we have new people join us, so I thought I'd go through and let you know what to expect. Those of you that have been with us, you already know, so just bear with us for a couple minutes. But we have to start off with this disclaimer, and the main thing to glean from this is the fact that we are not registered to give individual investment advice in the US, and any pricing that we talk about is expected to be or thought to be in US dollars unless we mention otherwise. If you're new, take a screenshot of it, read it at your leisure, but those are the main things that the powers that be want us to convey to you. So the way the process works, we'll start off, talk about the market itself for a few minutes. Then we'll go through and look at any case studies from our website that we may have closed as alerts for our subscribers. In this past week, we'll review case study considerations that we have selected during this TradeFinder webinar. And then at the end, we'll look to see if we can find one to follow for future weeks. And with whatever time's left, I'll take questions at the end. So that's the process. So with that said, let's go ahead and take a look at a chart of the market. And the important thing to see here is the fact that we've run right up to that previous three. We have surpassed it just barely, but we're right at a important Fibonacci level. You can see the 38% Fib level there. That's acting as a bit of resistance over the past few days. Not unexpected at all for that to happen. I believe we might even have talked about that last week. So the market has moved down a bit. So when you see that, you want to put the 10-day moving average on and see how we're doing with that. It's the short-term trend indicator. And we closed a little bit below it on the 24th and then back above it yesterday and trading right around there today. I see some questions popping in. For those of you that are new, I thought I would mention this. For those of you that are new, please feel free to ask your questions. Great support guys that are on, they'll answer them if they can. If it needs to come directly to me, I'll catch those at the end. So if I don't get your question when it's asked, please don't think I'm ignoring you. It's just that I can only focus on one thing at a time. So it's me and I get distracted. So save all the questions for the end. So again, please feel free to ask them and don't be upset if I don't get it right when you ask it. The questions will be at the end. So back to the market, we were trading basically right around that 10-day moving average, right at the previous wave 3 high. I don't think there's anything here that is unexpected that's occurring in the market at all. We've talked about the zigzag pattern that we have right here with the expected move up to that C wave target, which corresponded with the wave 5 target before it actually labeled the wave 5. It labels it when it becomes qualified. So at that point in time, it moves down to where it's actually trading rather than the forecast move. But we still have that zigzag forecast. And if you remember, they are exactly the same spot. If you don't go back and look at one of the previous recordings, you'll see that both of them were giving us roughly the same price total. So that's still in play. Nothing seems to be out of the ordinary as far as unexpected continued move to the upside. I think the market is finding a logical place to rest here. Pardon me, with this fib resistance area that we're in. And one other thing that I wanted to show you is another one of the cool tools that we have with ProfitSource is this triangle tool. And we're about to start our new educational series on Elliott Wave. As you know, we did the trade scan series where we talked about the confirming indicators that we utilize. Well, now we're gonna go deep into Elliott Wave. And that's the key of the technical analysis system. The confirming indicators are the support system, if you will. So the searches are run based on those because we don't want to spend time looking at Elliott Wave patterns if there's no supporting cast to it. So we start with that and then apply Elliott Wave. So now we're going to get into the meat and potatoes, if you will, of really learning and understanding Elliott Wave. And so one of the things that Elliott talked about was what's known as the diagonal. And it's a bit of a triangle type pattern in general terms, but it's also in one of the 5-wave patterns rather than just having the typical 1, 2, 3, 4, 5 impulse. When you go through and have these types of movements, kind of in a triangulish pattern, it's a diagonal, which is also quite often resolved itself to the upside. The majority of the time it is. Usually when we're talking about triangles in themselves, we don't pick a direction. The triangle can break either direction. But when you're dealing with more of a diagonal type pattern that coincides with what's occurring with the Elliott wave pattern in general, those tend to resolve themselves to the upside. And so I just wanted to add that in there, that's also into the mix as far as potentially moving higher from here. So we'll look and see when we break above that 38% fib level, if we have any more trouble here, or if some of this resistance that's occurring now also has to do with that previous wave 5 high. Likely it's more the previous 3 and the 38% fib level, but we might break up and then kind of bump our heads again against that previous 5 before going up to hit that extended target, or maybe it gathers itself, the market is talking about gathers itself and then busts through there with that pattern of higher lows that you clearly saw in that triangle / diagonal type pattern. So I thought you might find that interesting. It's another one of the new cool tools that we utilize, and a lot of people say they struggle to see those types of patterns. So now all you have to do is click on highs and lows and it draws it for you. So you don't have to worry about visualizing it yourself. Anything that we can do to automate things, I think in this day and age is beneficial. So that's where we are in the market. And as I said, I don't think there's anything that's unexpected. We might take a look at the DMI, and as you would expect with what's occurring, the ADX is just like, not too excited about what's occurring at the moment. You can see, however, that the positive directional indicator is above the negative, indicating that the buying pressure is still in control. So the buyers are still in control, not by a whole heck of a lot, but the market isn't really doing much either. So the fact that it's going up to sideways is pretty much confirmed with what the 2 directional indicators are saying. If we had a more significant crossover with the negative above, I think there'd be maybe a little bit more concern about moving back to the downside and possibly coming down to where this 4 was. But at this point in time, I don't see that. And the fact that the ADX did curl up a little bit as the market was moving up towards resistance. So all the ADX is doing now by kind of going sideways to slightly down is reflecting that, yeah, we've got a little resistance right now. If it retraces all of that move, that would be a negative as well. So if you're looking for the market to move down from here, what you'd want to watch for is you'd want to see the market start to come back lower, obviously, but more importantly with the DMI is the negative directional indicator break above the positive in kind of a vertical type fashion, not a sideways break, but a big move to the upside, and then see this ADX just retrace this move from the low here. So the ADX would tell you that's pretty much the end of the upward move. The negative directional indicator would tell you that there's a little bit of a changing of the guard, that maybe the bears are starting to come in, and that would be less evidence of the market moving higher. But even looking at the DMI, again, I go back to, I just don't see anything right now that's showing that the market is not going to go and fulfill that zigzag pattern. And if you've listened to any of the videos that I've done or any of the discussions that we've had, you know that I'm a big fan of zigzag patterns. It's my favorite pattern to trade. I'm putting an awful lot of weight in them, and they have a pretty high percentage of accuracy. I think from a just a common sense standpoint, it makes sense as well that we get to new highs, we get all that publicity from the market hitting new highs, likely a rush of the money that's on the sidelines comes in, because there's still a lot of people that just have no belief in this rally, especially with everything else that's going on. We're in the middle of earnings season. I don't know if you've been watching the earnings, but some companies are doing great and then other companies not so good. We had Intel that disappointed hugely, and then AMD came out after the close today and they did great. And two different companies in the exact same sector. One was a major disappointment and the other one was a big surprise. So it's a hit or miss when it's coming to earnings season, and I think you just have to be very selective in what you're looking for. You're playing with the high flyers. You know, Amazon had a big correction. You mess with those, and when the market does correct, wipes out a lot in a hurry. I know that a lot of people have been trading those and doing well, but when it turns, it can wipe out a bunch of gains in a hurry. So we tend to stay with the things that fall in line with our search parameters. With that said, I thought I would go ahead and show you that there's not really much else for me to say as far as the market. So I thought I'd come over here and share with you a recent alert that we did in our website for our subscribers. It's in the volatility portfolio. As you can see here, was on GLD. Now, we already had a trade that we closed out on SLV. So we had a directional trade on SLV. We talked about this in the past, and then a non-directional trade on GLD, just in case, because we're dealing with the dollar is weakening. I sent out a tweet talking about when is the dollar going to collapse. The Federal Reserve is still pumping money, although granted not at the rate that they were, but now we have Congress that's looking to do a whole nother round of stimulus, and it's taking its toll on the dollar. And there's some conspiracy stuff out there, so I'm not going to get into that, but at some point in time, it's going to just be too much weight on the dollar, I think. And that's when things could get really dicey. I mean, you just cannot keep printing money forever with no regard to what the consequences may be down the road. That's my opinion. That's just purely my opinion. And I could be completely wrong on that. Maybe we can print money forever and nobody cares. I just find that hard to believe. But up till this point, we've gotten away with it. And we're getting ready to do a whole bunch more with this next round of stimulus. So we'll see how the dollar handles that. But so far, it hasn't handled it too well. But you know, if the dollar had caught a bid or whatever, you could have had the metals go the other way. Hence the reason that we did the strangle. So our entry was on June 17th for GLD, and we put all this information on our website in every single alert for our subscribers, so they get not only the alert that's sent out to them via email and text message, or both if they choose, but then they can come to the website and see the particulars of the trade as well, in addition to the text and email that they get of the strikes, months, etc. So we had this interesting chart on GLD. It's a little bit different than normal, as you can see here with the sideways move that moved into this symmetrical triangle. And then, as I'm sure you're probably aware, if you've been watching the networks at all, both gold and silver moved to the upside. So we had already closed out the silver trade. So now we go ahead and close out the gold trade because it was overbought short term. And hindsight being 2020, could have waited another day because it got even more overbought. Stocks can stay overbought or oversold for short periods of time, but it's a short period of time. Well, how do you define a short period of time? Exactly, you can't. There's no definition. So you just trust your indicators. GLD was showing us that it was overbought. We had a very nice profit in the trade. As you can see, we generated a 60% gain on the trade. So at some point in time, you're happy with your profits. You can't go back. If you go back and second guess yourself on every single position that you put on, you'll drive yourself nuts or go insane. You can't do that. So if you're happy with the profit when you exit the trade, regardless of what happens from that point forward, be happy. Be happy that you exited and took your profit at that point in time. and don't go back and look around. But I think this is also really interesting. We got these really cool dot plots that we use for the alerts as well, which shows the profitability mark to market. I mean, we're as transparent as you can possibly be. Everything is right in front of you every single day on every single alert. Who's doing that? I don't know anybody that gives you as much information on their alert service as we do, in addition to the exit alerts, not just the entries. I know a lot, they give you an entry and then it's up to you to get out. Well, anyway, but this is a great example of how the strangles work. And if you were to sign up for the volatility strategy, and then we put on 4 or 5 strangles, all of a sudden you're going to have 4 or 5 trades that are reflecting a loss in your account. You're going to be like, what is this? What's going on here? I don't see that equity curve to the upside that the website shows. By very nature, the very nature of a strangle, you're buying an out of the money call and you're buying an out of the money put. So you're buying extrinsic value on both sides. In other words, you're buying a lot of time premium. So every day that goes by, time value erodes. So what happens is the position reflects a loss until the breakout occurs. And then you can see what happens. So this is very normal as far as how the strangles work. And I like to point that out because sometimes people become a little bit shocked. You're thinking, okay, you know, I'm putting on a strangle. I don't care whether it goes up or down. That's pretty cool because now we just took one of the hardest parts of trading away, right? As far as picking direction, now we don't have to pick direction anymore. We just let the stock decide which way it's going to go. But like I said, if you're newer and you have 4 or 5 of them on at once and then they're all reflecting a loss, it could be a shock to the system. Just understand that's how it works. That's the way they're designed. So they're going to show a loss until they break out. And then once they do, boom, this is what happens. It goes vertical and you hit your profit target and you're out. So a lot of information, again, that we share with you. Everything is labeled, everything is numbered. So as I was mentioning before, about as transparent, I think, as anyone could possibly be when it comes to an alert service. And then last week, if you weren't with us last week, I went through and showed that we have an awful lot of educational material on there as well, that the public can come in and pay for it, but all of our subscribers get it. They get all the educational information for free. It's all part of your subscription. So it's far more than just an alert service. All right, now let's go take a look at a few of the past, and then I believe last week somebody asked me to show some displaced moving average examples, so I'm going to show some of that tonight as well. But I thought we'd go back and look at some of our previous case study considerations that we had, and I wanted to show we did LOGI was actually one that we sent out as an alert to our subscribers. And then we had picked this one a couple weeks ago. And you can see that it made a nice move to the upside. We actually got out back here. And then it moved a little bit more, and now it's come back, and it's actually kind of forming a little tiny triangle here. If it was a bigger triangle, it would certainly be a consideration for moving it from the directional impulse strategy over to that non-directional volatility strategy that I was just talking about with the strangles. But it's just not quite big enough, I don't think, to warrant that. But we're going to do some more analysis on that with the options and see where they are. But a pretty nice move to the upside. So that one worked great, and that was a nice profit that we had for our subscribers as an alert. Now, one that we did not send out as an alert was RMD, and now we looked at that one. Then we looked at the two the same time on the 14th. And so if we walk back, another really cool feature here, you can walk back and see what the chart looked like. It just takes off everything from there, so you're not clouding your vision with it. So that's pretty cool, the fact that you can go back in time and do that. So here's where we were. And the reason that this one didn't come out, I just didn't like the option pricing, the way it was set up. So this one didn't go out as an alert. The LOGI one did, but I did want to show you that the technicals worked. So my point for showing you this, even though we didn't send this out as an alert because of the options, the technicals were spot on. And if you've been following along with the TradeFinder for the months that we've been doing it, you're well aware that our track record is pretty darn good with what we've been doing. So I wanted to show that one since we had not sent that one out as an alert. I thought you would find that interesting. And then we looked at Masco, and then at some point in time, you know, how much profit do you want? So this was on the 21st. And if you just stayed with this one, then well, Masco was the 14th. So Logitech and RMD were before that. So this one was 14th. Okay, so we looked at this and it moved to the upside, and you know, I think I was challenging you that if you hadn't got out, you were getting greedy, and then look what happened the next day. So if you didn't, then you're like, okay, I got super greedy, but that's been about it. So it moved up, moved back down, moved up, down. So it's getting a bit overbought some point in time. So be happy with your gain and move on. And then last week we looked at ACN, and this one is just pretty much gone sideways since we looked at it. We take a look at the DMI. It's kind of interesting when we look at the DMI here. The ADX is showing that there's strength to the move. So it's confirming that there's strength to this upward move. It's not ideal, however, when you see the positive directional indicator break back below the ADX. You much rather see that positive directional indicator above here. So what does that mean if you didn't go through the trade scan and learn on the individual indicators? What that means is that quite often that's telling you the strongest part of the move is over. Now, it's important when you're talking about the strongest part of the move being over that we don't misinterpret that as the move is over. It can still go to the upside. And that's the thing that people get confused about when you say, well, the strongest part of the move is over. Well, they're expecting that the correction to come then. That's not what it means. It can still drift higher, but it's weaker. And as it drifts higher, if the indicators don't re-energize, if you will, in other words, if that positive directional indicator doesn't jump back above the ADX, then it's something for you to consider every day when you're looking at the market, or whenever you look at your portfolio, is to keep an eye on the fact that, hey, we're moving to the upside, but it's not a super strong move, and you might be ready to take your profit or a small loss or whatever a little bit sooner, depending on what's happened. But it's just something for you to be aware of. I have a watch list every day of stuff that I'm looking at. So that would be another item that would go on the watch list. Usually a watch list is stocks where the indicators are showing, hey, this is one that's looking interesting, but it hasn't fulfilled all of the indicators yet. Something is missing so far. One of the things hasn't lined up, but boy, if it does, then it's a green light to go for the confirming indicators. So I keep an eye on those every day to see if they change or if they go the other way. And this would be just another item to be aware of. We are consolidating at a very interesting spot right above the recent wave 3 and wave 5 high from the previous move. So it's got a pretty darn good area of support here. If it broke below 220, that would be another area of concern. So the fact that the ADX is still moving up is comforting. You'd rather see the positive directional indicator break back above there as far as a more sustained move to the upside. And we know we have supported 220. So there's no reason to consider doing anything other than just watching it and letting it do its thing at this point in time. Just wanted to give you the two things to be on the watch for. So we break below 220, then everything changes. We may very well be at the start of the wave 4. And for those of you that are new, I go through this a lot because it's a misconception that happens a lot. When people see this, they're thinking that this means the wave 4 has started. This is a projection. It's saying if the wave 4 were to start now, here is your likely target price for the corrective wave 4 move. It is not telling you that we are now into a wave 4. So it's important to understand that as the stock continues up, the confirmed or qualified move is 3. That's why we have the circle around the 3. That's the wave that we're currently in. That's the current qualified wave, and it's confirmed because we move over here. So we're moving to the upside, and as the stock continues higher, these targets will move. They'll adjust with it because, again, they're projections based on if the 4 were to start. They're not forecasting that the 4 is going to start. That's where we look at the Elliott wave pattern itself, the patterns within the patterns. We look at the varying degrees, all the stuff that we're going to get into in the Elliott wave class. So hopefully you've been coming to this TradeFinder for a reason. And my guess is that the reason is that you're interested in Elliott wave. Well, you're going to get a course in it and really fully understand the intricacies of it. All right, so what I wanted to show is the displaced moving average. People ask about looking at the displaced moving average, so I wanted to share that with you. And we have these pre-computed scans, and for our subscribers in the software, they're automatically put in there for you. And in the corrective stocks, I went back because you can change the date, and this is fantastic for back testing. If you wanted to back test your own system, you can go back in time, figure out what indicators you want to look at and test it. It's really cool. That's how I came up with the system that I have now, is just hours upon hours upon hours of back testing and creating scenarios and what could happen if this happens. And you just, anything that you can think of, you can do. You can go back in time, and so instantly you can see the results. So you don't have to wait moving forward. You don't have to say, okay, here's my parameters now, and then you wait a couple months to see what the results are. By being able to go back in time, then you can create your systems and searches and then instantly see the results, and it just saves a tremendous amount of time in education. So talking about the displaced moving average, the displaced moving average is one of the indicators that's in the corrective search. And so here's an example, MGNX, as you can see. And so this line here is the displaced moving average. So that's how it works. If it crosses that, then you're looking for a corrective move. Now, that corrective move could be many different things. It could be the end of a wave 5 and we're coming back to the previous 4. It could be that we are creating a zigzag pattern and this is a corrective move here and we're looking for a new move to the upside. In other words, you could start a potential zigzag there with a move there. But basically what the displaced moving average is telling you this move, this 5 move here, is likely over. Now, again, it doesn't mean the stock's done going higher. It just showed you that we could be creating a zigzag that creates a new wave 5 high, or it could be showing us that the 5 is completely done and we're going to follow the Elliott wave rules of correcting back to the previous 4. And that's when you look at your other indicators. What are they telling you? Well, at this point in time, the ADX is coming down. So it's also saying that that move that was once strong is now weakened. The negative directional indicator is breaking above the positive. So sellers are moving in to this position here. So at that point in time, you would think that, maybe you're going to continue lower. And so far, that's what's happened. So basically what I did is I just walked it forward from when it came off as a search result. And so we're still moving lower here. Now take a look at the DMI with where we are now. And you can see that the ADX is still showing, yes, this move is so weak that it's done. So we pretty much can say that 5 segments done. Now it leaves us with the 2. Are we coming back to the previous 4? Or is this a corrective zigzag pattern? And we're likely to move up here. Well, look where we are. That's what's really cool about this zigzag tool. Look where we are, 61%. Massive Fibonacci level of support. 61.8% is the, in my opinion, strongest fib level that exists. So this is a pretty good area of support. So what we watch for now is any indication that we are going to start this wave C. In fact, unless you were given a signal out of the DMI that says, no, stay away, that would be an entry. This would be a potential entry to move to the upside of a corrective pattern, being a corrective zigzag pattern. Remember, corrections are flats, zigzags, and triangles. Those are your three corrective patterns. If this B, and this is another cool thing about this zigzag tool, if the B were to come down to 70%, then we could be moving into a flat, but that takes away this zigzag to the upside. So the fact that this labels how far the fib correction has been without you having to use a fib retracement tool, which puts lines all over your charts, etc., you can quickly see where the fib retracement level is and helps you to, all right, do we still have a potential zigzag? Well, to me, if we pivoted right off this 61% level, so if we break below that, to me, the percentage chance is that this is the end of a wave 5 pattern. We're coming back to the previous 4. Again, I would want confirmation out of the DMI on that, but that would be my first thought. At this point in time, I'm thinking, all right, we've got a V wave correction here. We have a qualified zigzag to the upside, a corrective zigzag to the upside. And when you take a look at these two directional indicators, the sellers are already starting to weaken a bit on the bounce, but the buyers aren't stepping in. So if we saw this negative directional indicator coming down and the positive going up, I'd have more confidence that this move is going back to the upside. At this point in time, I think this is a wait and see trade. We're trading, I mean, well, there's plenty of room. We're at $25 and the potential target is 37. So that's a plenty of room to the upside to make a very nice profit in a trade. So let's not rush it. Let's wait until we get a little bit more information out of it. And then there's that displaced moving average. We haven't even broken back above that yet. So at this point in time, it would be, okay, I'm interested. This looks like it could be a great C wave to the upside, a really nice zigzag pattern. Love the pivot off the 61%. It's my favorite, as I've said ad nauseum. But there's not the confirmation that I would need from the DMI to enter right now. So what do we do? Well, there's another one, right? There's another one that goes on the watch list as far as what happens from here. But this is a great exercise, a great educational exercise, which is what the TradeFinder is for, is to educate you and hopefully create further interest in Elliott Wave, because my opinion is the greatest technical indicator that exists. So the more people look at it, the better. So anyway, that's what we'd be looking for there. And we had this one on F5 Networks, and that was an earnings thing. So there's not much doubt as far as what's going on there, is there? So there's nothing that we can do. It's already done its thing. When it crossed the displaced moving average, it's moved too far down. Obviously, we're going back to the previous 4 is what's happening here. But I did want to show you this. That's more of the signal that I was talking about as far as a negative directional indicator moving upward. So when you see it go vertical like that, that's the signal that you're probably coming all the way down. The bears have taken control. So you get that red line moving vertical. Again, I referenced that earlier. This was a good example of it, so I wanted to share that with you too. All right, so now let's take a look and see if, let's get back on today's date and see if we can go through some examples. We only have one to look at today, so that's gonna simplify things a bit. Mondelez. DMI looks good. So you know how this process works by now. It gives you all the indicators so that we know that it was following along with all those. Now we put the Elliott wave on, and we're not in a significant Elliott wave pattern. We went through some flats here, as you can see that. I take those off. You can have it, label those if you want, but I like to do it myself, and I like to use these tools to do it. So I'm more a fan of labeling them myself, but you could turn them on if you wanted and you'd see flats through there. But right now we're coming out of this flat and we've broken above, and there's your sideways corrective area here. And we're breaking above that, and we've broken above these highs that acted as resistance, the top end of the trading range that occurred in April. So that's moving to the upside. So then we look at the DMI, and that looks pretty good. That ADX is going pretty vertical, so there's some strength behind that. It's not totally evident by the volume, is it? Today we had good volume, but not as supportive of volume as you would like, but the ADX is a great indicator for strength of a trend, and that's pretty good. Plus I like this, you know this by now as well, this 45-degree angle move. And the reason I'm gonna, at some point in time, I'm gonna start asking you questions rather than giving you information. That's how you learn. So if I say something over and over and over again, then instead of me telling you, I'll ask you, and if you can regurgitate the information back, just like being in school, then you know that you're learning it and you've understood it. So my point here is that I like the 45-degree angle movement because those tend to hold. When you have a 45-degree angle on your impulse move, every impulse move is going to correct. So you're still going to get a corrective move. But most of the time, when the impulse is at a 45-degree angle, the correction is not violent. It's not severe. You get just a little bit of a pullback. And here's a good example of it right there with Logitech. That's where we got out because we saw this coming. So we got out when there was some people, a big player was getting out. Every day that there was, every time there was a bar to the upside, it was sold into. So the opposite of accumulation, somebody was getting out of the position. And so we saw that this was ripe for this, and that's why we close it out. Now, again, it turned around and went back to the upside, but you know, Monday morning quarterback, we had a nice profit. We're happy with it. We move on. But this is the type of corrective move that you get out of a 45-degree angle rally. So that's what I wanted to share with you. You don't get the big spikes to the downside when they correct. So you can monitor the correction and buy into it if you want. What I didn't like was, look what happened. After that correction, then we went more vertical. So if you were wondering, well, why didn't you get back in? Well, this is why. Because it totally different angle on the move to the upside. I still keep an eye on everything that we get out of. I still watch them. The long list of stocks that I watch, but after that little corrective move, it went more vertical. And look, the corrective move was a bit more violent, a bit more volatile. And that's exactly what I'm talking about. Now we're correcting, so it's undoing that volatility, consolidating, I mean. So we're consolidating and getting rid of that volatility, but I didn't like the vertical nature of that move. And that's a perfect example as to why. But the 45-degree angle move looks good. It really looks like this stock wants to come here and test that previous 5 at 60. We're trading at 55. So about a 5-point move. We like to get a 10% move out of it. Just checking the options to see what they look like. Yeah, there's There's good liquidity here. The only problem is the months. We go from August and September all the way to December, so there's no October or November months available. Jump to December, but there's really good liquidity and not bad looking spreads in September. So you could probably get away with doing straight calls on this too, just depending on what you wanted to do with your deltas, what you wanted to set up. And the spreads are a little bit wider maybe than what you would like to do with an actual spread. Because remember, when you're putting on a spread, buying an option, selling one, so you get two different one. You got the spread twice, and that means that stock has to move further to overcome the slippage there between the spreads before you generate a gain. So when you're putting on a spread, you like the bid and ask to be close by. But as we've mentioned so many times, it's really hard doing these after hours things because you don't know if the spreads are just widened because the market's closed. We still have an elevated VIX. And it could be when the market reopens that the spreads tighten up. And then you could take a look at it then. But that's the one for this week. So I'll make a note here. The symbol is MDLZ. I think we've handled the problem where you couldn't see the screen. I think everything's really clear now. So hopefully everybody's happy about that. And with that, I'll take a few questions and we'll wrap things up. Kev, send that to me in an email and I'll respond there. SSD, let's look at SSD as a potential TradeFinder. We've been doing pretty good with the results of the search, but happy to take a look. Remember, can't give you investment advice, but we can do technical analysis. Wave 4 corrected right at 50%. Doji. It's not on the list. So one of our indicators is not in compliance here, but that looks pretty good. The DMI is above 20, so that's okay. Separation between there doesn't look bad. Let's look at the moving averages. I'm a little worried about this doji today, right here at resistance. Now, remember, all that means is indecision. So it could just be we're pausing and it blows right through it, and we head to the upside tomorrow. It looks like a pretty good zigzag as well. That's not bad. I'd have to do spend some more time on it to find out why it's not on the search, but one of the indicators I look at is not loving it for some reason. But yeah, the price target is almost where I drew the arrow. Yeah, so it looks like, and here's the other thing is they talk about these whole numbers a lot. You've heard me say that, how they just act as magnets to draw stocks. The percentage when a stock breaks above 85, I don't know, I forget what the number is. I used to know it, but there's a high percentage chance, let me word it a different way. A high percentage of stocks that break above $85 a share go to 100. If they're going to get that close, they're going to go to 100. Now the zigzag pattern has got it going all the way to 110, but it would be difficult to believe, especially with a good looking DMI, that we get this close and don't make it to 100. So, let's keep an eye on that. We'll look at that one next week too. Come back and see if that doji has anything. Steve says, Rob, there's talk the SPY is in a sideways market for a while. Any comments? Well, we've been kind of consolidating here for a while, so I think that's true. If they're forecasting a sideways move from here, I mean, anything's possible, but to me, it looks like we're chilling here against some resistance. We're catching our breath. I still trust the zigzag and the indicators that we're going to break that high. If things change, then I'll change, but I follow the indicators. And I think that the sideways stuff, if that's what you're talking about, has been going on. You know, we went, just as a reminder, we had a symmetrical triangle here that then morphed into, which is unusual, morphed into a descending triangle. So we broke down to the support level, but didn't break the support level. So it became a descending triangle. We broke out of that one, but only to the point. So the breakout from the descending triangle was only to the point of the recent 3 and the 38% fib retracement level. So, you know, you could argue that we've been going sideways since early June for over a month. Was it 5 to 6 weeks? We've been kind of not going very far. We've moved a little bit in between, but in the end, you know, we've been in this 300 to 320 range since, if you want to count that, all the way back to mid-May. So yeah, I think we've been going sideways for a while, and we'll see. But for now, I still stand by what I was saying before. But yeah, it's pretty much turning sideways. TSM. Well, that's vertical. Taiwan Semiconductor. Well, we had a strangle on that back here, and we caught this move. We had this one in the strangle as an alert, and we caught that one. But now, after consolidating that move, it's gone. I don't know what you would do at this point right now. If you were still in it, congratulations. As I said, we got out back here with a nice trade, but that is so overbought right now. The 10-day moving average is way down here. The stock's way up here. And on top of that, the 10-day moving average is vertical. It's going vertical, and you still have that kind of separation. Usually when you get that kind of separation, the 10-day moving average has been meandering a bit, and then you get one of these thrust kind of moves. And so then it takes a while for the ADX to catch up. Now, normally, I would say one of two things happens every time when this happens. This is one of those things, or this is a rule. We talk about in our new Elliott Wave class, rules versus guidelines. Rules, you can't break a rule. If you break a rule, the pattern is disqualified. Guidelines, okay, they're there for you to keep an eye on. This is a rule. No security in any time frame gets very far away from its 10-day moving average. It doesn't happen. So one of two things is going to happen here. Either this is going to come back down and retrace a bit and come back towards that 10-day moving average, or it's going to go sideways and let the 10-day moving average catch up. Now, here's an example of that, which surprised me. Tesla. So you had Tesla moving vertical, and it just kept going vertical. I thought that we would come back down, and we didn't in that first move. So look what happened. It consolidated. There's one of two things happens. Remember, we either come back down or we go sideways. As vertical as that was, I really thought Tesla would come back down. It didn't. It went sideways. It did the other thing. And we broke out of that little triangle, and we came back down, and now we're bouncing around. This stock is amazing right now. But you look at the 10-day moving average, and now you don't have you can come back here and say, yeah, but you got all these gaps that need to be filled down here, and we could come back down and test $1,000 a share. Probably will at some point in time, but who knows when that is. That could be way down in the future, you know how I feel about gaps. They get filled. There's just no rhyme or reason as to when, and it could be a long time before they get filled. But you look at this, and as hard as it is to believe, Tesla at 1,500, you can't say it's overbought now. You could say that back over here, but it rectified that. See, look at that. See, there was the overbought, and it just let the 10-day moving average catch up. See that? Did you watch how the stock went sideways and the 10-day moving average just caught up to it? One of those two things happens. It either comes back down or isn't. Now, the last time it did that, look, it corrected the next day. So here we had the 2 vertical days, and then the next day we came down 152 points. So we went up 129 and then 100. So we went up 229 points, and then the next day we came back 150. So it corrected to the 10-day moving average by coming back that time. This time it went sideways and let the 10-day moving average come up. So really, really good example of the 2 different things that can occur when a stock gets overbought, which, back to Taiwan Semiconductor, one of those 2 things is going to happen here. Now you're in that area I was talking about where the stock is becoming above, it's getting near 85. So, but I don't think it's running straight to 100, but I don't know. I didn't think SLV or GLD were going to get as overbought as they did. Again, we still made nice trades on both of those, but we're just in a different world right now with all the liquidity, and things get so overbought. But if you're chasing that, you're going to get burned. So I still say be cautious, take your profits, be happy. Don't try to catch the bottoms and the tops, because it's almost impossible in normal times. It's that much harder with what's going on right now. You made 3 times the money on the AMD calls using the DMI. Well, good. Congratulations. Yeah, AMD is having a, where's it trading now? They're in a very good after-hour session with the earnings. So you're going to be up here tomorrow. Congratulations on that move. So we're back to grossly overbought again. So same scenario as Taiwan Semiconductor, just fantastic moves and going to be overbought. Is there anything left? Not in the short term, I don't think. It's got to consolidate for a while, but we're getting in that area again where at some point it's likely going to move to 100, but I don't know when that'll be. But I can't tell you what to do. I'm more apt to put the gain in the bank and move on to the next one. You catch moves like that, and you caught a couple of them. So congratulations. CCI. One thing that I wanted to mention here is we do these things called Fireside chats, because you guys ask a lot of questions. And if you're that interested in questions, we do Fireside chats for our subscribers, where basically it's just an entire session where I would start off, talk about the market for a couple minutes, and then we open it up for questions and just let the subscribers ask questions. And I know we try to get as many as we can here at the end of the session. And so we get a handful of them, and then I don't get anywhere near all of them. But that's another thing that the subscribers enjoy, is just an extended, just flat out Q&A session. CCI is just a really nice triangle. Let's see where I would like to see the ADX just a little bit lower, but it was before today. So it was below 13, which is where I like it to be. We've got a breakout day today. The LA wave, I turned it on, but remember, when you see a triangle like that, you go with the triangle and try not to get swayed by what the LA wave pattern is showing you. Now, the LA wave pattern is forecasting a continued break to the upside, and it may very well do that. But you need the second day. So with CCI, tomorrow matters. Do we get the confirmation day? Look, it tried to break out. Here's a perfect example of what I'm talking about. If you've ever, this is going to be a good place to wrap things up. If you've heard me talk about the triangles, the strangles that we do for the volatility strategy, you have to have the second day or the confirmation day, follow-through day, whatever you want to call it. So look, we had a breakout attempt here, no confirmation day. Another breakout attempt here, no confirmation day. So we're still in the triangle. We're still forming the triangle. And over here, you could have made a case at this point in time that, hey, you know, there's the triangle here. But actually what you were doing is forming a much larger triangle is what really was occurring. And it tells you that because the breakouts had no follow through, no confirmation day. Now we're here again. But look what's happened. So right now, you've got another breakout day, but it's a lower high from the previous two breakouts. It's not even as strong as the previous two breakouts were. So are we going to get the follow through day with them? I'm actually going to keep an eye on that. Just curious. Myself, I'm just curious to see what happens with this. Because you know, right now it's just looking like, wow, what a great set of lower highs that you have there. Look at that. It's a perfect alignment. So the key is going to be, do you get to follow through a confirmation day? If you do, then likely the LA wave pattern holds and there's your target up near 200. You're out another one of those whole number things that act as magnets and draw stocks there. And so I think that's the way things are going to pan out there. But wow, this was a great session in my opinion, because a lot of the things that I talk about so often as far as rules that I follow, we had great illustrations of those by looking at actual charts. So I hope you found that as informative on your end as I did in presenting it to you. Thanks again for your attention. Have another great week, and we'll talk to you again next week. Take care, everybody.